Hello everyone, my name is Eloise, Key Account Manager at Kensington Mortgages, and thank you for joining us today for our Kensington criteria session, discussing all the ways that we can support your customers in Northern Ireland and how to ensure you get a great service from Kensington. I'll be joined today by Chris Kirby, Key Account Manager, and your local Kensington BDM, Sharon Cochrane. I'll hand over to Chris firstly to take us through some of our residential USPs. So over to you, Chris.
Thank you, Eloise, and welcome to all of our broker partners in Northern Ireland. As Eloise said, my name is Chris Kirby. I'm the other Key Account Manager at Kensington. Really pleased to be able to explain and discuss our proposition with yourselves in a bit more detail today, and hopefully a number of solutions that the three of us will talk about that will benefit yourselves and your clients as we look ahead. So what I'm going to do is I'm going to cover off some of the Kensington customers and the reasons that brokers have used us previously. So what I want to do first of all is start off by looking at self-employed. So self-employed and contractors is a really important area of the market for Kensington. In fact, it accounts for over 50% of all of our business. So it just sort of shows that it's a market that we get, and a market that is typically underserved by your traditional high street lenders. So there's a number of reasons why advisors will look to Kensington with their self-employed customers. We've made a recent change to our proposition, which now means that we can accept any government support that has been taken by customers as a result of the COVID-19 pandemic. So whether that's the SEISS grants or the bounce back loans, or if the job retention scheme has been used by customers to pay their employees, that income is all means tested. So as a result of that, we are able to consider that and include that when assessing a self-employed customer's affordability. We only need 1 year's trading for self-employed customers as well. So if you have a customer who has maybe been employed as a teacher for a number of years, and then they've changed profession, they're now a carpenter, and they've been doing that for a year, no track record in that line of work, but that's absolutely fine. We are able to use 1 year's figures as long as those accounts are finalised. If the customer has been trading for a couple of years, then we're able to work off the most recent year. So it may well be that a customer has gone from earning £20,000 in 1 year to £50,000 in the most recent year. As long as that income looks like it's sustainable moving forward, then there's absolutely no reason that we wouldn't be able to use the most recent year. So it's going to provide a real good affordability solution for your self-employed customers. When it comes to assessing self-employed affordability, we can use salary and dividends or salary and net profit share for your limited company directors, whichever paints the most favourable affordability picture for them, as long as the customers have got that 50% shareholding. And what we are able to do as well is any business expenses, they can be ignored from an affordability perspective, as long as that can be evidenced. So not uncommon to see self-employed customers with car loans that are paid for by the business but held in personal names, for example. Okay. A big enhancement to our self-employed proposition was launched only a few weeks ago, and this is our new COVID-19 income recovery product specifically for self-employed customers. This is designed to support those that have been impacted as a result of the last 18 months. One of the biggest advantages of our self-employed proposition historically has been our flexibility to use the most recent year's income. So for those customers who have had a good year, their most recent year, that's fantastic. That proposition isn't changing. However, for those customers who are self-employed and their roles may have seen that their income has decreased by up to 25% in the most recent year as a result of COVID, as long as they've got a 3-year track record of trading, we're able to use an average of the last 2 years as opposed to using the lower figure of the most recent year. So it's going to give you, again, that affordability boost that your customers may need. And as a specialist lender, it puts us in a really good situation where we can say, if the most recent year is your best year, fantastic, we can use that. Or if you have had a drop in your income as a result of COVID, then utilise our COVID-19 income recovery product, and we can look at using an average of those 2 years. So we've got solutions that best fit your customer circumstances. And for contractors, again, we've got good solutions there as well based on affordability. So we'll use the day rate of the contract, times that by 48 weeks. As long as there's a 12-month contracting history in place, we can consider those customers that are now utilising umbrella companies. All that we ask for, again, as I've mentioned, is that 12-month continuity / 12-month contracting experience. And it should be something that can be of real benefit to yourselves. And hopefully you can see why we do so much business in the self-employed space. The next area is complex incomes. So again, Another specialist area that probably is underserved quite significantly by your traditional high street lenders. So why will advisors in England, Scotland and Wales place their customers with complex incomes with Kensington, and why should yourselves in Northern Ireland consider us for these customers? If you've got a customer who gets a basic income, but there is a significant uplift in that income, such as bonuses, commission, overtime, as long as there's a 2-year track record with the same employer and there is consistency in the income, then we can look to consider taking 100% of that variable income. So there is no basic to variable split. So it may well be you have a customer who is, let's just say, for example, a recruiter. They may get a basic salary of £20,000, but they may get incentivized income such as commission, bonuses, there may be some overtime in there as well, and they may earn £50,000. If they've got a 2-year track record of earning £50,000 with the same employer, their most recent pay slips support that higher level of income as well, then there's no reason that we wouldn't use the highest level of income. We won't have a basic to variable split. I know some lenders will cap the amount of flexible income that they can include. As long as it can be evidenced, there's a track record, there's no reason that we can't take it into consideration. And then, you know, more things that are sort of like guaranteed, such as banking hours, shift allowances, etc. All of those additional taxable incomes can be considered. Okay, when it comes to expenditure, we will use the regional ONS data. So from an affordability perspective, if you want to calculate the maximum borrowing available, make sure you put the basic in, the variable income in, how long they've been with the current employer, and you'll be hopefully pleased to see the level of borrowing that's available to your customers. Links to this as well, and this is again a sort of an attractive proposition for those customers that maybe get good basics but also good bonuses and commissions, is we have a high affordability stretch for high earners. So if there's a combined income on an application of £100,000 or more, then subject to affordability, subject to credit, we can look to get up to 6 times income for these customers. The big benefit of this is that there is no restriction as to whether the customer is employed, whether they are self-employed, whether they're on a day rate contract. It's all down to affordability. Okay, so as soon as you get that combined income of 100k, Kensington should be the lender of choice when it comes to maximising potential affordability for your customers. And then linked to contractors, linked to complex incomes, we're absolutely fine with CIS contractors. We just take 12 months worth of vouchers. And again, 0 hours contractors and agency works. I know sometimes 0 hours contractors can sometimes be a bit of a political topic for debate, but fundamentally we treat them similar to agency workers, 12 months with the same employer / 12 months with the same agency, and we're absolutely fine to utilise the income as long as there's consistency, and the most recent pay slips support that. Okay, and then one of the main reasons that Kensington has always been a specialist lender of choice, and is something that we still do very, very well, is when we look at the customer's credit history in the background. What the biggest advantage with Kensington for any application, for any customer, is that we do not credit score. So it may well be the customers actually they don't have bad credit in the background. They might just have a thin credit file. They might have limited credit, and as a result of that, they're going to have a low credit score, or they haven't got a credit score, and as a result of that, some high street lenders will shy away from lending to these customers. With Kensington, we use Equifax from a credit referencing perspective. We do not credit score. It is all based upon the conduct, and we will lend up to 75% LTV, as you know, in Northern Ireland, and that can include remortgaging with a capital raise for some debt consolidation in there as well. So we have 3 different types of criteria from a credit background. Our select products, we need 36 months with no new defaults or CCJs registered, no missed mortgage payments or missed rental payments in that period of time. Our select range is where you will get the 6 times affordability stretch, as I've alluded to, and there's a couple of specialist products as well, which we'll touch upon shortly. And also the core range is 24 months. This is exactly the same principle as the select range, so defaults, CCJs, missed mortgage payments, none in the last 24 months as opposed to 36 months. It does provide a slightly greater level of flexibility, and as a result of that, it might be slightly more expensive, but again, it's giving your customers those options. With the select and the core range, we're more than happy to consider customers who are in active debt management plans, as long as they've been in them for at least 12 months and there's good conduct on those. We'll also consider customers on the select and core range as long as they haven't taken a payday loan out in the last 12 months. They could still be making the payment, or they could have paid it off 6 months ago. That's absolutely fine. They just can't have taken one out in the last 12 months. And we'll also consider customers who have maybe had the odd blip on their on unsecured borrowing, such as loans and credit cards, as long as they've not exceeded the status 2 in the last 12 months and that account is now up to date, then again they would all qualify for our Select and Core products, which is fantastic. We've also recently launched our Resi 6 product. Again, this is designed to support those customers that are more likely to have been impacted by the past 18 months. So it is a significantly more flexible credit proposition. So we will allow one default in the last 24 months, up to £1,500, as long as it's over 6 months ago registered. CCJs, we will allow up to one CCJ up to £1,000 in the last 24 months, again registered over 6 months ago, and we will allow a missed mortgage payment in the last 24 months as long as it is over 3 months ago. One of the greatest areas of flexibility with the new Resi 6 product is our approach to unsecured borrowing arrears. So we will allow customers to have any maximum status of arrears on their unsecured borrowing as long as that status hasn't worsened in the last 6 months. So you may well have a customer who has got a credit card which is at a status 6, and it may well have been at a status 6 for a year. That's absolutely fine because it hasn't worsened in the most recent 6 months. Okay, same policy around debt management plans applies on the Resi 6 product. So again, as they've been in a DMP, as long as they've been in that for at least 12 months, that's fine. We've got a greater degree of flexibility on payday loans as well. So as long as a payday loan hasn't been taken out in the last 6 months, then again, the customer would qualify for the Resi 6 product. And this is available for movers or for remortgage, whereas the Select and the Core range is available to remortgage, movers, as well as first-time buyers. But hopefully you can see that great level of flexibility for those customers with adverse or limited credit profiles. And then finally, from myself, an area that I wanted to cover off from a Kensington standpoint is new build. It's been a big focus of Kensington over the last couple of years. It now makes up over 15% of all of our business, so you can just sort of see how important new build is to Kensington. Good news for Northern Ireland, we will treat houses and flats exactly the same, so we will lend up to 75% LTV on both of these. We will accept family gifted deposits going towards the deposit contribution, and that is in addition to a 5% builder's incentive as well. Okay, so plenty of support available for people looking to buy a new build and their deposit sources. Standard purchase offers are valid for 6 months. With new build, we understand there can be a long build time associated with many of these, so we can extend these by up to 6 months, subject to no change in circumstances and another credit check. So again, a greater level of flexibility for yourself because it means you're not writing the same application twice. And as I previously mentioned, we'll look at those customers who are self-employed. They may have complex incomes, they may have credit issues. All of those are considered for new build because the new build products are the same as our standard products. We do also have a dedicated new build underwriting team. Valuations will be instructed on day one, for example, and I know again this will be touched upon shortly, but we do have a new build eco product. So for those customers that are buying a property which is an A or a B EPC rated property, then they may well qualify for £500 cashback depending on the product that they select. So again, another great incentive for customers to buy a new build property. When they are using Kensington, they'll get potentially £500 cashback. So hopefully you've found that the past few minutes with myself really useful, and we've talked about the types of customers that Kensington could support from a self-employed perspective, those with complex incomes, those with credit history issues or limited credit history, as well as our new build proposition. So what I'm now going to do is hand you back over to Eloise Hall, who is now going to talk to you in a bit more detail about some of our specialist products. Over to you.
Thank you, Chris. Looking at specialist products, Kensington always promotes what we call the Kensington difference. We want to be a lender in the market that creates options and opportunities rather than just regurgitating other lenders' criteria and simply just competing on the sourcing tables each week. So firstly, we've developed some very unique products. We have our Heroes Mortgage, which we launched at the back end of 2019, so a little while ago now. Now, this product range was specifically designed to help certain key workers onto the property ladder by offering an affordability stretch. Little did we know that these key workers would form the backbone of the UK's fight against COVID. Now, although quite frankly, these key workers deserve a little bit more than a helping hand onto the property ladder, the reason we were able to help create this product was through a lot of data and research. Now, Kensington is a very data-driven lender. We have over 25 years worth of data from both our own book and other smaller lenders' books that we service. Based on this data, we know that these jobs are very sustainable. So we know that we can have a little bit more flexibility when looking at loan to income ratios. And we know that these customers are much more likely to keep up with mortgage repayments. We therefore created the Heroes Mortgage, which offers up to 5 times income for a certain set of key workers, which includes police officers, firefighters, NHS staff, and that also includes clinicians, paramedics and nurses, armed forces personnel, and teachers and lecturers. So this offers up to 5 times income, and that is for both parties on the mortgage. So if one person qualifies as a hero and the other person doesn't have that key worker job title, that's not a problem. We would still offer up to 5 times income for both of the applicants. As Chris mentioned earlier as well, we are very good when it comes to variable income. So if you have a nurse that has overtime, shift allowance, band pay galore, we can utilise 100% of all of that whilst also optimising the 5 times income. So it is an affordability calculator, so do make sure to go onto our website and run it through that channel to make sure it does stack up, as things like commitments and children, term time, that does impact it, but you can get up to 5 times income. There is also a maximum age on the Heroes range, which is 40 at application, and this is available up to 75% LTV. We also have our Young Professionals range. So the Young Professionals range is very similar premise to our Heroes range, where we offer certain job roles a higher income multiple. So this is applicable for accountants, actuaries, barristers, commercial pilots, dentists, medical doctors, and solicitors. So you get the type of clientele we're trying to target with this product range. And we offer up to 6 times income, up to 75% LTV. Providing they have a minimum income of 35k for a sole application or 50k joint income, we are able to utilise the Young Professionals up to 6 times income. And very similar to the Heroes range, the Young Professionals range does also come with a maximum age at application of age 40 years old. The reason behind this is that, as we all know, the PRA and the FCA have restrictions around loan to income ratios, which is usually around 4.5 times. However, because of the research that Kensington have done around these groups of individuals, we know that although we may be offering them 5 times income or 6 times income at the moment, once these customers have qualified or spent more time on their career paths, we know this will actually look more like 3 times income or 4 times income in just a few years. So by helping these customers at an earlier start, so at the age of up to 40, this is usually when individuals achieve their income trajectories. We're able to offer them that higher income multiple earlier and really help them onto the property ladder. So we also have another product innovation, which is our most recent product innovation, which is our Eco Cashback Mortgage. This was the first of its kind when we launched at the time, and it was around the time when the UK had committed to net zero emissions by 2050. So to help get there, the government introduced a £5 million fund to help the financial services sector develop green home products, and green mortgages are one of those areas. Most initiatives focus around discounted mortgage rates or cashbacks for purchasing new builds, and as Chris mentioned, we do have one of those, so £500 cashback on A or B rated properties. But we also noticed that whilst these are great, there's not enough emphasis on the existing housing stock. With over 17 million homes with EPC ratings of C and below, we need to encourage homeowners to make these little changes. There was some research done by the Citizens Advice Bureau and the Energy Savings Trust that revealed 9.7 million UK households haven't made any changes to the way they use energy in recent years. And considering that 25% of the UK's net carbon emissions come from houses, it's really important for us to try and make these changes to reduce carbon footprints. So we launched the Eco Cashback Mortgage, which is available up to 75% LTV. And this is an incentive-driven proposition. So there's £1,000 cashback if your customer is able to improve their EPC rating by 10 SAP points within 12 months of their completion date. Now, that 10 SAP points stands for Standard Assessment Procedure Points. And what that means in human terms is on the table on the right-hand side of the screen here. So you can see certain upgrades to a property account for certain amounts of SAP points. So if we were to look at line 6, we can see that loft insulation, that's 10 SAP points. So that would qualify your customer for £1,000 cashback. Or lines 4 and 5 combined, changing your light bulbs to low energy lighting and putting some insulation around a hot water cylinder. Those two things combined account for 10 SAP points, which means your customer would get that £1,000 cashback if they make those improvements within 12 months of their completion date. So really low cost yet effective things that will help your customer put money back into their pockets by improving their EPC rating. So I really appreciate all your time on those, but I will now hand over to Sharon, your local Kensington BDM, to run through our buy-to-let highlights. So over to you, Sharon.
Thank you, Eloise. So thank you for your time today. It's really good to be able to speak to you all. I'm going to cover off our buy-to-let proposition and also submitting business. So to start with buy-to-let, so with our buy-to-let proposition, we offer individual buy-to-lets as well as limited company buy-to-lets, and on both we can go up to 75% loan to value, and we can also consider let to buy situations as well. Maximum age application is 70, and we can look to do a 40-year term. So yes, we can take it up to age 110. We have no minimum income requirements for existing homeowners. So any first-time landlords who have their own residential house, there's no minimum income requirements. For your first-time landlord, non-owner occupiers, so any first-time landlords, say living with mum and dad, we've got a minimum income of 40,000. We have top slicing built into our affordability calculator as well, which is on our website, which I'll cover later. And we have no rules on the background portfolio, so we can do up to £2 million worth of lending with Kensington, and that is the only rule that we have. Our limited company buy-to-let proposition. So we have our limited company buy-to-let proposition available, and the rates are available for both individual and for limited companies. So we don't have a more expensive set of rates for limited company buy-to-lets, which is good for your clients who, if you want to do limited company. These products are available up to 75% as well. We need a separate SPV to be set up under one of the following SIC codes that are on the screen just now. We can consider newly set up SPVs as long as they're showing on the company's house. So the underwriter will do a search when they're processing the case to see that they're showing on that. So we need the newly set up ones to be showing on that, and also the limited company to have a business bank account opened up in the limited company name as well, because you'll need that when you're keying the case on, you'll need the bank account details. We can look to take up to 4 directors for limited companies. And the way that we stress it is slightly different from other specialist lenders, because what we say is we treat we look at the borrower separately for the portfolio rules. So what I mean by that is, if you have a portfolio landlord with, say, 20 individual buy-to-lets in the background, and they come to Kensington for their first limited company buy-to-let, our underwriter will be assessing the applicant, whoever the applicant is. And in that scenario, the applicant would be the limited company, so they would ignore the 20 buy-to-lets in the background. And we also have free valuation products available on our limited company buy-to-let products as well. So next, we're going to look at submitting business. So the Kensington website has got everything available that you will need access to. So get onto the Kensington website for anything that you're looking for. It covers off our criteria. You can look at products. It's also got the web chat facility as well. If you're looking for a quick answer on criteria, get onto the Kensington web chat. It's available 24/7, so you can ask questions 24/7 and get a quick answer as well. We also have our documents on the website as well, and that's really good for you to go on and get any documents that you need to upload to the cases. One thing I always say to brokers is, if you haven't registered, get registered as soon as you can. Don't wait until you get that urgent case on your desk and then you've got to do an urgent EIP. get registered if you've not registered already, and you've got a few spare minutes over the next few days or weeks. Get yourself registered. It can take up to 72 hours, and that's why we push brokers to get registered just now. Ideally, they do go through within about 20, 40, 48 hours, but I always say to brokers to get registered as soon as you can. So when you've done your AIP, so you've got yourself registered, you've done your AIP, you've got your accept on that, and then you're progressing on to the full mortgage application stage. This is our packaging guide. So with our system, we look for the minimum requirement, we look for minimum documents, to be uploaded to each case for the case to then be allocated to an underwriter. So this slide here covers what our minimum packaging would be for both residential and for buy-to-let. So for example, for residential, to get the case started and get it allocated to an underwriter, you would need to upload the customer declaration, income proof, deposit proof, and valuation fee if applicable, and it's the same for buy-to-let as well. And then the next slide, I'm just going to cover off why that's important. So as mentioned, when you're submitting the business through, you've got the full mortgage application stage, you've got the broker portal here, and you've got the dashboard as well. It's very user friendly. You can go on and upload documents. You can click on the envelope, and that lets you reply to the underwriters. You can send a broker message through on the portal as well. But the key is to get your minimum requirements uploaded on day one, for that case to then be allocated out to an underwriter. If any of the documents that I mentioned on the previous slide are missed, then the case won't be allocated over. So that's got to be uploaded first. Case gets allocated to an underwriter, then it will go through the day one assessment. And how it works is, if the underwriter requires any additional documents on the back of the ones that you've already uploaded, they'll create an underwriting task. They'll upload a document tab for you so that you can upload the documents that they've requested. And the idea behind it is that you're not uploading documents that we don't ask for or that we're not needing. The less underwriters see, the better. So only upload the documents that you get asked for. So for contacting Kensington, you've got lots of support. You've got my mobile number there, you've got my email address. If you can't get me straight away, please call through on the broker support team number. What I always say to brokers is, if it's pre-application, for any inquiry, for new business, for an AIP, for help with an AIP, go through to option 1. So option 1 on the 0800 number is for the broker support team. And as I say, the guys are there all day to take calls from brokers to help them out with anything that's pre-application. Once the case goes in and the case has been processed by the underwriters, you go through to option 3, and this would allow you to speak to the new business assistants and also the underwriters. And once a case is offered, if yourself or the solicitors are looking to speak to our completions team, you go through to option 4. So you've got lots of support. So thank you very much for your time this morning. As I say, you've got my contact details there as well. So please get in contact with any cases that you wish to discuss, and I look forward to doing business with you. Thank you.